Vallourec is a world leader in premium tubular solutions for the energy markets and other industrial applications. Philippe Crouzet, hello.
Hello.
You are the chairman of Vallourec's management board. You've announced a set of transformative measures. Tell us a little bit about the broad objective, first of all, of those measures.
Well, actually, we are going through a crisis, especially an oil crisis, of an unprecedented scale. Our volumes are down 40% in 2015 compared to 2014, so it's really a massive fall. When you have to deal with such a difficult environment, the first priority is to adapt, to adjust your capacities to the low load of your mills. And that's what we've been doing all along the year. All the teams of Vallourec all across the world have been very committed to adapting, adjusting our capacities to the new level of the market. And we've generated a lot of savings, we've generated a lot of free cash flow through that process. But that's not enough. When we look at our environment, when we look at how our customers are considering their future, we know we have to go further, and we know we have a big challenge of improving the competitiveness of Vallourec everywhere in the world. So the purpose of our transformation plan is to raise our competitiveness all across the world in all our operations.
A little more detail now, if you will, on the main features of the plan.
There are three key initiatives in the industrial aspect of the group and one financial. The first of the three industrial initiatives is regarding Europe. We have overcapacities in Europe. We need to adjust the capacities of Europe to what is the size of the market accessible on a profitable basis from Europe over the long term. So we have to close a number of equipments, we have to reduce the number of lines, we have to reduce our capacities in order to concentrate Europe on high value added markets. This is what Europe is good at. And to support that effort, to support the rationalization of our European footprint, we are putting more money in R&D and innovation. This is what Europe is up to do in the future. When we took a longer perspective, the future of Europe is to concentrate on high value added product and innovation. This is the first initiative. We are developing a second initiative. We want to create, and we announced that we are creating, two very competitive routes, one from Brazil, the other one from China, to address our global markets. In Brazil, we today have two operations. We are going to merge them in one single entity. The first of these two operations is fully owned by Vallourec now. The second is a joint venture with our long-term partner, Nippon Steel Sumitomo Metals. We agreed on merging the two operations. The new entity will be owned by Vallourec with 85% of the shares. This merger enables us to generate a lot of synergies and improve significantly the competitiveness of our operations from Brazil. This, combined with a more competitive local currency, the Brazilian real is becoming more competitive, will put us in a very good position to address global markets where today we are not enough competitive selling from Europe, as an example. So this is route number one. The number two highly competitive route is a new one we are creating from China. In China, a few years ago, we took a minority position in Tianda Oil Pipe, a privately owned company which is very competitive compared to even Chinese competitors. But of course, so far, we've not brought our technologies into Tianda because we only have a minority position. We've decided to take full control of Tianda in agreement with the present owners. This will enable us to create a new, very competitive route to address markets where we want to regain market share or protect our existing market shares. So we will provide premium products based on very competitive tubes manufactured in China or in Brazil, depending on the circumstances and of the market. So these are the three initiatives: Europe, China, Brazil. The third industrial projects that we've announced is to reinforce our cooperation with Nippon Steel Sumitomo Metals in the area of R&D. We have a long-term partnership with Nippon Steel Sumitomo Metals more specifically the area of connections for oil and gas pipes. We've been partnering for 40 years now, so it's very, very strong. We've decided to put more resources in order to be even more aggressive and even more successful in promoting our product, which is the leading product in the area of oil and gas. If you combine those various initiatives in Europe, in China, in Brazil, the new ultra-competitive routes, and in innovation, we think we will significantly improve the competitiveness of the group. We expect all those initiatives to generate an additional contribution to our EBITDA of 750 million euros from now on until 2020. 50% of that amount should be achieved by 2018, even if the markets do not recover. So this is a significant improvement of our performance.
Could you tell us more now about your project of capital increase?
So this is the fourth initiative to finance those various projects and to enable us to go through the crisis without harming our operations and various projects. We are calling for a capital increase of 1 billion euros. 50% of that amount will be subscribed by two strategic partners. One is Bpifrance, the French sovereign fund. The other one is Nippon Steel Sumitomo Metals Corporation, which is our long-term partner in technology and in Brazil. So both of them will subscribe through a reserved capital increase to 50% of the total 1 billion euros of capital increase. At the end of the process, both of the two strategic partners will own 15% of our capital and are committed not to increase that percentage over time.
To conclude, Philippe Crouzet, tell us about your outlook for 2016 and beyond, and why you're confident.
First of all, we expect the year 2016 to be really a tough year. As I said before, a number of our customers are postponing their projects, reducing their capex. But when we look at the curves of demand for oil and oil supply, which today are unbalanced, there is more supply than demand. Given what the drivers of both demand and supply, we can expect those two curves to rebalance maybe by the end of this year or beginning of next. So it means that we can expect, and this is the consensus on the oil market, the price of the barrel, the price of oil, to rebound in the course of 2017. Now, if we take a more long-term perspective, we are pretty confident that the oil and gas markets, amongst others, will recover. Why? Because we are presently, the whole supply chain in the oil and gas industry is underinvesting. We are underinvesting. Our customers, the oil and gas companies, have been underinvesting in 2015. They are underinvesting in 2016. By underinvesting, I mean that they are not investing to the level which is required to rebuild their reserves. So there is a natural depletion, there is a natural diminution in the production of each oil and gas wells in the world. If you underinvest, the production will decline. So at some point in the future, the oil and gas companies will have to resume their capex plans. And we expect this to happen during the next years, maybe not 2017, but more significantly 2018, 19, and 20. This is why we are confident. Demand for oil is growing, demand for gas is growing even more, so there will be a need to drill more, and there will be a need for more tubes and pipes. The purpose of our transformation plan is to put us in the best position to leverage that need for more oil, for more tubes, for more pipes, and hopefully for more tubes and pipes from Vallourec.
Philippe Crouzet, thank you very much.
Thank you.